Welcome to the video.
What's going on, folks? That's right. Maybe a day late on this, and many dollars short, as you might notice coming up here. But let's just say it's going to be a hot one. We're doing the monthly recap, seeing how the portfolio did over the month. And let me tell you, month of October, you can suck it. That's what you can do. Terrible month. Terrible month. I got devastated here. Anyways, let's get into it. We'll show you the individual account. We'll show you the small little joint account. We'll do it. And then, hey, second video after this, obviously the one you got to stay tuned to. Obviously, it's shorter, so that's helpful too. But you will go ahead and get the lovely dividend recap for the month. What do yeah, you'll get to see every dividend we earned in the month. Look, I like to be transparent, and here we are being transparent. There's a jacket behind me, kind of freaked me out. Slumped over my shoulder, didn't know what the F it was, but here it is. So let's get into this. Obviously, we got a lot to cover. Decent. There were definitely some changes that have happened this month. I may or may not be the owner of a new stock. Unfortunately, we'll get into that story as we get there. But we own a new stock, so I'll show you that in a little bit. Let's start, obviously, with the big ol' individual account. Wow, clearing the throat, baby. So yeah, we go line by line in these positions, kind of see how we're doing. Definitely some in which we're struggling a little bit. And yeah, so we start off, we do alphabetical, and first you always see it every time. Apple, my, I guess at this point, third largest position now. Actually, not a great month here for Apple. I mean, as you can see, I guess I should have mentioned, in total, we're down about $1,800 in the last month, which only represents about a 1%. So not terrible, but just again, it still sucks. I'd rather be up. If you ask me, I'd rather be making money than losing it. But Apple here. Uh, so this one we are up pretty big on Apple still, no doubt, even despite a pullback. We're about $5,200 on Apple, pretty significant off of our 50.5 shares we've got. AbbVie recently had a little bit of a pullback here, but a little bit of recovery since then, which is nice. So we've just got our 10.39 shares here. Nothing crazy as far as this one. Up around $381. Not too bad. Arbor Realty Trust, pretty bad month here for REITs in general. So that's kind of where you see a decent amount of our money lost for the month is the whole REIT industry just taking a kind of a crap, a literal dump on my face. But Arbor Realty, nice to see. We've got nearly 207 shares here. This one, we are still up around $150. At this point, pays nearly a 14% dividend. So, price decreases aren't bad because then when I get the dividend paid out, reinvest for cheaper, and I can buy more at these prices too. So, hey, AMD, one we actually acquired a little bit more of AMD because we only bought 2 more shares, I think. But anyways, we got 17 shares of AMD now. Acquired 2 because it dropped down to around $95, and I thought this bad boy needs to be purchased, and here it was. Up today, 10%, pretty massive. So with that being said, we're up around $387, or the equivalent of about 26%. So decent time to buy. Wish I would have bought more, obviously, but it's all I had available. Okay. Amazon, 16.18 shares here. This one mixed bag. Obviously reported earnings last week here, actually too. And very negative tech. Tech was doing very negative when you look at last week, and then Amazon earnings kind of turned things around and turned things positive. So pretty happy for that. Obviously, Amazon doing good things, leading another great day today, up 3% here. So if our 16 shares up around $288, not too bad. Apple Hospitality, 117.18. I just get this one for the monthly dividend. The share price has been pretty consistent. We are up $257, which is nice. But, I stay for the 6% yield that pays monthly and compounds monthly, so I'm happy for it. ARI, another one of our REITs, not a great performance this month either. None of them have been. 196 shares we have of this one. I am down actually $226. In total, I am up because, I've earned quite a bit of dividends from this guy, nearly yielding 15% at these rates, and just released earnings, and they're able to cover the dividends. So let me just tell you, it's a pretty good price for this guy right now. So might be looking to acquire more in the near future. I'll just tell you that. Bank of America, 50.5 shares here. This one's been an absolute garbage. All the financials really have been. 50.5 for Bank of America, down about $246. That sucks. Citigroup, another one that's been pretty sucky. 22.7 shares, down $207 for that one. Just painful. Ridiculously cheap valuations, though, so I like them for the future. Carnival, still just our 100 shares. We're actually down now on it. We were up quite a bit when it reached like $19 a share, and we didn't sell. And for some reason, it's been pulling back like crazy, despite data showing that there's more travel spend than ever. But hey, it allowed me to sell a covered call, another covered call, at a cheaper price, and kind of earn some more income that way. So that was kind of nice, but obviously don't like to be down on the position. So Costco. Just still our 3 shares here. This one up around $374. It's a beast. I'll be holding that one for literally eternity. Don't you doubt it. Cisco. I've seen some positive with Cisco. 18.67 shares here, up around $142. Just a very basic, boring company. Nothing crazy. Disney, on the other hand, not basic and boring. It's an absolute piece of garbage. 30 shares of Disney, down $1,101. By far my worst performer. It's just terrible. I mean, it's been terrible for me. At one point, I was up thousands of dollars when it was at $160 a share, and then here I am holding it all the way down to the bottom. At this point, we're holding the bag, baby. Domino's Pizza, 4.05 shares. Cheap valuation here on this one, down $104. I still like where it's at. It's all right with me. I'll be fine holding that one. It's kind of a steady one. Ford absolutely crapped the bed this month here as well. We are still up around $83 off our 162 shares. Sold another covered call on it to get a little additional capital there too, which is nice. And come the 10th, I'll be selling another one to earn some more capital. So how about that? We love earning money, baby. Even if the stock's doing nothing. It's a garbage. It's the cheapest valuation I've ever seen for Ford. I loved it. It's so cheap. How could I not? How can I not buy more? I'm going to be good and not buy more. Gilead Sciences, 15.75 shares there, up around $257. Not too bad. Gladstone Capital, we did reach, obviously, last month over the 100 shares, and we're going to continue that trend up now 101. We're compounding that baby, reinvesting the dividends. And as you can see, we're up about $42, which isn't crazy, but earns about 10% in terms of yield, so I'm actually up a little bit better than that, so not too bad. Google, or Alphabet, 10.18 shares. Got hammered by earnings and really has bounced back again, kind of because of the Amazon results. And here today, just because really the Fed confirming that they're not raising rates at that current moment, so that helped everything get a bump today. But up around $318, I'll be holding that one forever. Home Depot, just the 2.04 shares, again pretty small position, but we're up massively, $117 or a nice 25%. It's good to see that. HP has seen a decent bit of recovery here too, 27.22 shares. My thesis on this one was really just the valuation was dirt cheap, and it still really is. It's a pretty small position still, but we're up around $19, so happy, pays a decent dividend, so not bad. Hercules Capital. This one, really in it for the dividend as well, over a 10% yield, and really close to 12% when you include the supplemental dividend that they offer. 113.67 shares, reinvested all the time. $81 up too, so actually a little capital gain too, so pretty nice. IBM, 6.3 shares, up pretty big here, $164, so pretty good. Intel has had a good resurgence here this month. After better than feared earnings. So 16.7 shares, still down about $216, but that's a massive recovery from where it was. I was down around 40% on this position, so good to see that. iRobot, piece of garbage, ready for it to be purchased at $39 by Amazon. It needs to happen. The trial date set for, or e-regulation date is set for February, so we'll see. I'm down $192, so that's just dead money right now. Not doing anything. Iron Mountain, That one, we've got 61.55 shares, one of my best performers you see here, up around 78%, $1,600 plus a nice dividend over 4%. It's been a beauty for me, and I'm pretty happy to hold that one. Coca-Cola, one of the value champions here, still pretty cheap, 16.5 shares here, up around $31, so it's been pretty consistent. Again, it's kind of there as a rock of the portfolio, not to move too much, just stay consistent. Kohl's has been, it's been crap. I mean, there's no other way to say it. We got 93 shares of Kohl's. The valuation is cheap. We're talking about a P of 5. I mean, this is ridiculously cheap, and it's not. Kohl's isn't going anywhere. They're surviving this recession, whatever happens. Look, Kohl's is surviving it and doing well. And you've seen that in the most recent earnings. I mean, they've done good things, and I think they're going to do good things on this earnings. I like the valuation for long term, and it pays a 9% yield right now in terms of dividend with how cheap it's trading. So we are down $505, or around 19%, which sucks, but I'm going to be holding that one for a while. Lockheed Martin, just the 2.02 shares, down to about $16. That one's had a rough month as well. Lowe's been doing pretty well, 2.303 shares, up around 29%, small position though. Main Street recently, Main Street Capital just raised their dividend actually by 0.05 cents, but again, it's pays monthly, 49.13 shares, up around $217, so not too bad at all. A little capital gain plus great appreciation or great dividend too, over 7% yield. Meta Platforms, formerly known as Facebook, one of my favorite positions here. Second largest right now. 32 shares. Really wish I had acquired more when it dipped right down to about 270. It was dirt cheap after earnings, after a fantastic earnings report that reaffirmed a lot of what I love about this company, and I still will love it for long term. I mean, this is a cash generating machine. I love Meta. I mean, again, I've said it too. Don't know if I have on here, but I'm telling you, this is a $400 stock by the end of next year. That's the price target I've set on it. I've done all the math on it, and that's a kind of generous price target. I mean, it's given it, a good chance of happening. That's all I can tell you. I'm not stretching, is what I'm trying to tell you here. Looked at the expected growth, looked at the free cash flow growth, and that's just where it's going to be. I mean, that's just what it is. Up around $4,100. Absolute beauty of performance here. 69% upward movement. Love to see that. Love to see that growth and see it keep chugging along. Microsoft, 11.4 shares. Decently large position here too, about $4,000. We're up big on this one as well, 98% or $1,900. Really nice to see Microsoft doing great things. I'll hold that one forever too. Love what they're doing and continue to do. Micron, 10.09 shares. Very cyclical. This one just goes up and down. It's a pretty small position though, but we are up about 53% or $243. So, hey, we'll hold that one. Neo, piece of garbage. We hate it. Actually purchased a call recently for January 19th, 2024, a $9 call. I don't know if this is going to pay off, but hey, I've got the call anyway, so we'll see what happens. Obviously, you see we're already down about 41% on that, so I'm just going to hold it. I mean, I think this thing should be over $9 by that point because it's trading cheaper and cheaper, man. But I think it's worth it. Obviously we're still up $148 or 386%, which is significant. We're just hurts though. Just hurts a little bit. We were up more before. Nvidia, fantastic day for Nvidia. So you see we just have our 6.0 shares, 6.00 whatever, up. What this refers to as $2,121. That's what I'll take a look at, and we'll go from there. New York Community Bank actually posted a fantastic quarter, but the stock's just not doing great with the financials as a whole just dipping. 48.52 shares. Feel really good about this company after the purchase of Signature's property, or I guess really their assets. The acquisition of those assets just makes me feel pretty good about them. We are down a little bit. Not if you don't accompany the dividend, which is 7%. I am up when you include that dividend in there, all time, but still, it's it's trading cheap. I like it where it's at. Realty Income, terrible month for Realty Income. 57.13 shares. You see, it's under $50. It's just hurts bad. I'm down $610 on this one, or 18%. The monthly dividend company is just getting hammered lately. And it hurts. It hurts. Omega Healthcare. This one's probably my next one to reach 100 shares. So excited about that. OHI. 92.47 shares here. Pays a beautiful dividend over 8%. And we have some capital appreciation up around 13% or $360. Penn Entertainment, piece of garbage. At some point, going to have to cut the losses on this one and accept it as a loss. Most likely, I'll just wait until next year so I can claim that on my loss for next year. I could this year, and I still have enough loss to go, but I'll just do it next year. See if it's got any more movement in it. At this point, I mean, what, $500 isn't the end of the world. So maybe it moves up by then, but we're down 46% or $433. So that blows. PepsiCo, 6.17 shares there. Up about $6.09, so really flat. We're just flat on that position. That's how that is. Plug Power, down massively. We're talking about down 59%. My worst performing position, but it was only $280, so not too bad. Made more than really more than $500 my original purchase back in the day when it was a penny stock, but yeah, it's just been garbage. It really has. Have a call for that one too. At $7.50 for $12.15. Probably not happening, but hey, you never know. Prospect Capital, 320 shares. You see that share count just continues to grow massively every month. We're repurchasing, about 3 to 3.5 shares. We are down pretty big here though, because this one also took a big hit with all the other REITs and or BDCs as well, down 25% or $550. 14% yield though. I like it at these valuations, and the earnings look good. They really do. Qualcomm, love this one. I actually purchased one share during this period as well. Only one for some reason, but 8.175 shares. Up $67 or 7%, so nothing crazy. Rhythm, another one that's been destroyed. Rhythm Capital, with the other REITs as well. Massive position here, 194 shares. Big day today, obviously, too. Pretty nice to see that. But we're up around $37. Not crazy, but an over 10% yield. I'm pretty happy to own this one at the current level, for sure. Starbucks, like having this one too, 10.27 shares. Obviously, I like all my positions. Why else would I hold them? But 16% up or $134. Not too bad. Charles Schwab, another rough month here for Schwab too, 15.22 shares. Down about $49 here. It's been pretty rough for this one too. Stitch Fix, this one at this point, I'm just selling covered calls on because it's a piece of garbage. I'm still down 60%, so technically my worst performance on a percentage basis is Stitch Fix. But I've been selling covered calls, getting, $10 here, $10 there every month. It's nothing crazy. It's not really anything special, but at least the position is getting me something in the meantime off a pretty small position. So Shopify following them, really rough month for Shopify. This thing was, about $68 when you look a month ago. 60 shares of this one. We're still up pretty big, 7.4% or $208, but we were up a lot more. We were up several thousands before that, so rough to see that. Here's my new position, as you heard me mention. I am the not so proud owner of Snapchat. 200 shares of Snapchat. How did this happen? Well, let's just say, got a little greedy, played some options, played earnings, bought some $10 calls for Snapchat, and needless to say, the stock skyrocketed after earnings. It was a massive open, but with all that volatility, the options market completely crashed for a solid 30 minutes, and I went into absolute panic mode because I couldn't sell the call that I was up big on. A couple $100. I was up big on the call. I couldn't sell it because the freaking options market was down. And you want to know what? I panicked and I hit exercise. And then I was like, oh, I made a big mistake. And you know what? It didn't let me cancel the exercise of the contract. So now I purchased 200 shares of freaking Snapchat, and I don't really want it. So what am I doing in the meantime? The premiums are pretty expensive on Snapchat actually for these calls. So what did I do? I sold a covered call at $11. Um, sold two of them actually for about 16, or I guess it was $18 a pop, or I don't know what I paid for it, or what I got credited for. Anyways, I got credited nicely um, for those covered calls, and that's what I'm going to be doing with Snapchat from now until I end up selling it eventually, which I will. I'm for now going to enjoy the fact those premiums are a little bit expensive, and I'll be selling 1 month at a time those covered calls. So that's my strategy for Snapchat because I do think it will go up over time. I do. Um, it's at really cheap levels, and while I'm holding it, because I'm forced to, unfortunately, um, I'm just going to make some money off of it. So yeah, Stanley Black and Decker, actually a pretty good earnings report here they posted. We're up yesterday pretty big, but overall we're down. We've got 10.3 shares of that one, down $46. Nothing crazy there. Target, 12.38 shares here of Target, down about $105. We're talking about historically cheap valuations on Target, really cheap. I love the level it's at right now. Tapestry, 31.3, been a great performer for me. $139 up, really only about 20% growth, but still been good for me. Paying a nearly 5% yield too. It's been pretty good. Tesla, just a 1.3 share still. Again, it's nothing crazy. We're still up a good 49% on it. We'll just be holding that one in case Tesla goes to 2,000. You never know, okay? Um, and then if it doesn't do anything, I've only got $200 on the line, so nothing crazy. Texas Roadhouse, uh, been kind of a stinker for me. I've got the 10.05 shares down about $54, just a little painful there. Vici Properties, this one's been taken down with all the other REITs as well. Pretty rough. 53 shares here, 53.3, down about $75, so that hurts. It does. Walmart, which is my biggest position, 64.74 shares. This thing hasn't had a pullback at all. It just really hasn't. In a great world, I would end up having 100 shares of this down the road, but it's going to take some time for that because I'm not necessarily acquiring any at these super high levels. But anyways, I'd love to sell covered calls on in the future, but I'm up $3,720 or 53%. It's been a beaut for me. It's been great. I love to see it. Then we get into our ETFs. Not really worth talking about individual price performances for the ETFs. Just kind of, sorry, almost throwing up over here. What the crap is that? We'll just kind of go into each one, what we own. Anyways, Wisdom Tree Small Dividend. We actually purchased a little bit of this Wisdom Tree Small Cap Dividend ETF. I feel decent about small cap coming up here next year. 14.37 shares there. It's only about a $400 position, so pretty small. We've got the iShares Core S&P 500 ETF, IVV, pretty small here as well, just the 2.04 shares. JEPI, JEPI, 48.41 shares there. This is a pretty big position. We are down decently on it, but, earns a good dividend. JEPQ, up a little bit on this one. We got the 24.11 shares. In it for the monthly dividend as well as the next two. KBWD, the Invesco High Dividend Yield Financial ETF. Obviously, financials have been getting destroyed. And then the next one, KBWI, the Invesco KBW Premium Yield Equity REIT ETF. 82.12 shares there, roughly similar, in terms of position size. Both pay monthly dividends, but both down massively because both industries have been getting hammered. So, the Vanguard Mega Cap ETF, 5 shares of the Vanguard Mega Cap ETF, which is only about $700, so nothing crazy. QILD, another monthly dividend payer, beautiful. Better watch the dividend video for that. 52.92 shares, worth about $1,000 on that position, or I guess around 900, I should say. So not too crazy. SCHD, is my large ETF. The Schwab U.S. Dividend Equity ETF, up or down about $90 in that one, just because the stocks in there, the performance has been pretty lackluster. but about $3,200 position there. SCHX, a newer one we've been acquiring more and more frequently. The Schwab US Large Cap ETF consistently does well and performs pretty well in line with the market, so it's good to have that. I'm buying a lot of ETFs lately just because individual stock pickings, it's getting a little bit tougher and tougher with all the volatility right now. And ETFs help to kind of buffer that a little bit. SPHD, Invesco, S&P 500, high dividend, low volatility ETF, 45.39 shares there. We're down on almost all of our ETFs too, but that one pays a nice dividend. SPYD, SPD, it's the Spider S&P 500 high dividend ETF. Boom, 25.36 shares. SPYG, 18.23 shares there of the S&P 500 growth ETF. The Vanguard Financial ETF, this one's been getting pretty hammered too. 10.3 shares here. VYM, the Vanguard high dividend yield ETF. I do like that one as well. Does consistently usually perform better than the market. 15.47 shares, that one. And then our last ETF, XYLD, the Global X S&P 500 covered call ETF. Similar to the QYLD, which is over the NASDAQ. But anyways, 18.95 shares there. We have our 4 CDs that we own here. One coming up this month, 11/30. We've got this 3.2% JP Morgan one that I bought a while back. So that's going to be $2,000 that come available to me, which is pretty exciting. I will be using that. And the money market has dwindled to about $2,000, and you want to know why that is? Because we had to pay $2,000 to buy Snapchat, and I didn't want to buy it on margin because why would I? So yeah, spent a little bit of that, but hey, that's that particular account, up around $16,000 here on this one, excluding dividends. So not too bad a performance there. And a quick rundown of the small joint one. Apple, we still just have the 1 share there. ABR 2.12. Ford, we got the 5 shares. Meta, just the 1 share, but pretty happy to have that because we're up, a solid 82% on that one. The time of buying that was fantastic. Just wish I'd bought more. Microsoft, 1 share there, up $94. That's big. Realty Income, down. It sucks. Vici, down. Just blowing. The iShares Core Dividend Growth ETF, DGROW, 5.09 shares. JEPI, 4 shares there. QILD, 6.33 shares. SCHD, the 7.17 shares. SCHX, we've been acquiring that in this one as well. 7 shares of that one. SPY, just the Spider S&P 500 ETF, we just have the 1 share of that. And SPYD, 5.06 shares. VIG, the Vanguard Dividend Appreciation ETF, 1 share there. Tiny position. And then XLF, the Select Strength Financial Select Spider ETF, 7 shares there. And then obviously we just have our $1,000 in this CD as well, coming due in June of next year, paying 5.3%. And $2,000 in the money market. So a decent amount of this is in really, I guess, cash and cash alternatives. So pretty lame, I know, but not really ready to acquire anything in particular with that. But eventually I'll be using that, money market fund. It's earning a great amount right now. Over 5% it's a pretty good yield. So anyways, that's this one. Dividend video coming up next. Stay tuned.